What if I told you that learning the basics of the stock market could help you achieve financial freedom? But there's one critical step you need to take first. Stick around, and I'll show you why paying off your debts is the foundation for your journey to investing success. Before you dive into the exciting world of stocks, let's talk about debt. Did you know the average person pays thousands of dollars in interest each year? That's money you could be using to invest and grow your wealth. Here's why paying off debt is step one. Most debts, like credit cards, have interest rates of 15% to 25%. On the other hand, the average stock market return is about 8% annually. If you're paying more in interest than you're earning in returns, you're losing money. So, how do you tackle your debt and free up money to start investing? Here's a simple plan. List all your debts. Write down every debt you owe, including the balance, interest rate, and minimum payment. Graphic, table with columns. Debt name, balance, interest rate, minimum payment. This gives you a clear picture of your financial obligations and helps you prioritize which debts to pay off first. Choose a repayment strategy. The debt snowball method. Pay off your smallest debt first for quick wins and a psychological boost. The debt avalanche method. Focus on the debt with the highest interest rate to save the most money over time. Here's why paying off debt is step one. Most debts, like credit cards, have interest rates of 15% to 25%. On the other hand, the average stock market return is about 8% annually. If you're paying more in interest than you're earning in returns, you're losing money. Create a budget. Track your spending and find areas where you can cut back. Allocate any extra cash to your debt repayment plan. Graphic, text overlay. Use budgeting apps like Mint, YNAB, or spreadsheets to stay on track. A budget is your roadmap to success. Even small adjustments, like cutting out unnecessary subscriptions, can make a big difference. Increase your income. Pick up a side hustle or freelance gig. Sell unused items around the house. Negotiate a raise at your job or explore higher paying opportunities. Every extra dollar you earn can speed up your debt payoff journey. Automate payments. Set up automatic payments to ensure you never miss a due date. This avoids late fees and keeps you on track. Once your high interest debts are gone, you'll feel a huge weight lifted off your shoulders and be ready to start investing. Now that you're debt free, let's talk stocks. Here are the basics you need to know as a beginner investor. What is the stock market? The stock market is where companies sell shares or small pieces of ownership to raise money. When you buy a share, you own part of that company. Graphic, text overlay. Example: buying one share of company XYZ equals owning a piece of XYZ. Once your high interest debts are gone, you'll feel a huge weight lifted off your shoulders and be ready to start investing. Now that you're debt free, let's talk stocks. Open a brokerage account. Choose a reputable platform like Vanguard, Fidelity, or Robinhood. The stock market is where companies sell shares or small pieces of ownership to raise money. When you buy a share, you own part of that company. Let's talk stocks. Graphic, here are the basics you need to know as a beginner investor. What is the stock market? Graphic, text overlay. Example: buying one share of company XYZ equals owning a piece of XYZ. How to start investing? Start with index funds or ETFs. These are collections of stocks that reduce risk by diversifying your investments. Set up automatic contributions. Commit to investing a fixed amount each month, even if it's just $50. The power of compounding. Compounding is when your investments earn returns, and those returns earn even more returns. Investing consistently over time is more important than trying to time the market. The earlier you start, the more time your money has to grow. Graphic, growth chart showing the effect of compounding over 20 years for a $50 month versus $200 month contributions. Graphic, text overlay. Risk tolerance scale. Low bonds, medium index funds, greater than high individual stocks. Keep learning. Read books like The Intelligent Investor by Benjamin Graham. Understand your risk tolerance. How much risk can you handle? Beginners often start with low-risk investments and gradually explore higher-risk options as they learn. Graphic investing without a plan. Set clear goals and stick to fluctuations. Here are a few mistakes to avoid as a beginner investor. Stay informed about market trends, but don't panic over short-term fluctuations. Trying to time the market. Focus on long-term growth rather than short-term gains. Ignoring fees. Watch out for high fees that can eat into your returns. Overreacting to market volatility. Stay calm and stick to your strategy. Scene transition. Closing message. Remember, building wealth is a journey. It starts with paying off debt, continues with smart investing, and grows with time and discipline. Don't let fear or overwhelm hold you back. Start small, stay consistent, and watch your financial future transform. If you found this video helpful, let me know in the comments. What's your first step toward financial freedom? Don't forget to like, comment, and subscribe for more amazing tech stories. Hit the bell icon to stay updated on our latest uploads.